More than $100 billion on the line in what might be the largest IPO funding in history, and that's according to Renaissance Capital. The firm's IPO ETF, which tracks 60 or 70 of the largest IPOs, includes names like Snap, Spotify, and Altice. It's already up more than 18% so far this year. Let's bring in CFRA Senior Director Todd Rosenbluth and Astoria Portfolio Advisor John Davi. And Todd, I think the important thing here is the market's got a huge potential this year, 200 IPOs potentially out there. It's tough to play with ETFs, though. There's a limited number here. One of them, the IPO ETF, up big this year. Again, you're getting a fairly small amount of distribution in these stocks, very heavy concentration of a fairly small group.
Yeah, you get Altice, you get Snap, you get Spotify among some of the larger holdings that you'd find in tech and communication services. What's interesting to us at CFRA is when you look at it, you see real estate as the largest one. So VICI Properties is the largest holding. What's also intriguing about this ETF, besides being very small and not that liquid, is that it rebalances every quarter, and a stock can only be inside for 2 years. So you get a short window of time to hold these potential up-and-coming companies.
And John, is that the right way to do it, holding a company for roughly 2 years? Seems like beyond that, it's not really an IPO. There's not that many choices, though.
It could be. I mean, there's another competing product, FPX, which holds on to stocks for 4 years. So I guess the argument could be is that it takes longer for you to kind of monetize your IP. So if you think about Facebook, when they IPO'd, it took them many, many years for them to actually become profitable and the stock to accelerate. So FPX holds on to it for 4 years. But to your point, I mean, there's not a lot of options out there.
Todd, we already have some activity. It looks like Slack is going to be going public fairly soon. They seem to be announcing, not clear what path they're going to be doing it exactly. I guess the big question is 200 IPOs coming, maybe the biggest year ever. Who's going to buy all of this? Is there enough buyers out there, or are we going to have to see prices come down significantly?
Yeah, well, we probably will see prices come down. Valuation is going to matter when there's too much supply that's out there. This ETF that we're talking about, IPO is the ticker, is relatively small, but when investors are looking to play this theme, there's now a product for it.
Yeah, and are we going to see alternatives? So, for example, if some of these companies are going to need a certain valuation, or they're going to look for something else. John, can we see, for example, increased M&A activity? That seems one logical thing. If they can't get the prices, they'll just merge somehow. Some of them may even just sit on it. I'm trying to sort of game out how this may go with more IPOs than anybody's ever seen before.
Yeah, I worry about that because that's a classic late cycle economic indicator. I mean, we probably reached the kind of top in terms of like global economic GDP. So I worry when I hear like record number of IPOs. It's like the ultimate contrarian indicator as far as I'm concerned.
And we've got some old school names. I mean, yes, we've got WeWork in there, but GE Healthcare could be one of the biggest IPOs of all time. We've got 65 billion. Renaissance has 65 billion just in GE Healthcare. If that goes, that would be a huge IPO.
Yeah, and we're going to see brand name recognition probably help. And what we're also going to find is these stocks will ultimately make its way into more broadly diversified, either sector-oriented or growth-oriented strategies once they get mature a little bit. Some index providers have a cutoff, but you'll see these end up in your portfolio whether you buy an IPO ETF or not.
Well, just by itself, GE Healthcare, if it IPO'd, it would itself be one of the biggest stocks in the healthcare sector and in the healthcare ETF that's out there. So there are some potentially very large numbers. That's why I'm a little concerned about whether the IPO market is there. It's smaller than it was in 2000. The investor appetite, certainly for tech, is probably not as large as it was in 2000. At least doesn't seem to me.
Yeah, but you got diversification of some of the other sectors. So you'll have investor interest in comm services, in real estate, in various other sectors to provide some diversification for investors.
All right, gentlemen, thanks very much for joining us. Appreciate that. For more on how to play some of the biggest stories in the market today, check out the live show at the top of the hour. That's exclusively at etfedge.cnbc.com.